state of the Nigerian economy, with particular emphasis on the activities of the Central Bank of Nigeria during the second half of 2025. Let me begin this presentation by conveying my profound gratitude to the chairman, members of the committee, and the entire Senate for their commitment towards advancing our mandate of monetary and fiscal and financial stability. Despite global and domestic headwinds, we consolidated macroeconomic stability, strengthened financial markets, improved monetary policy effectiveness, and deepened collaboration with fiscal authorities. Bold reforms in the second half of 2025 delivered steady disinflation, exchange rate stability, and a sound banking system. Following this background, the rest of the presentation provides an overview of macroeconomic performance, but remain below pre-policy shift forecasts. Global growth is projected at 3.2% in 2025 and 3.1% in 2026, with advanced economies at 1.5% and emerging markets slightly above 4%. Global inflation is expected to continue its downward trend, although with some regional and country-specific variations. Inflation is projected to moderate gradually to 4.2% in 2025 and 3.7% in 2026, prompting cautious monetary easing globally. Developments in the international oil markets have been largely shaped by ongoing geopolitical tensions in the Middle East, economic slowdown in China, and easing of supply cuts by OPEC. Accordingly, the price of Bonny light crude slowed to $65.27 per barrel in November 2025 from $73.50 per barrel in June. Domestic developments. At the domestic front, real GDP growth sustained its positive trajectory, with the economy expanding by 3.98% in the third quarter of 2025. This was higher than the 3.86% recorded in the corresponding quarter of 2024, but 0.25 percentage points lower than the preceding quarter. The key contributors to the broad-based growth include crop production, ICT, real estate, and financial and insurance. Furthermore, the Composite Purchasing Managers Index, PMI, increased significantly to 56.4 index points in November 2025, the highest in the last 5 years, pointing to a more positive growth outlook for the fourth quarter of 2025. Mr. Chairman and esteemed senators, it is important to note that due to our tight monetary policy, stable exchange rates, and robust fiscal support, inflation has trended downward during the second half of the year, contributing to enhanced yields in the fixed income market. The foreign exchange market stabilized following reforms, boosting investor confidence and foreign inflows, and supporting broader economic activity. Similarly, external reserves strengthened significantly, supported by non-oil inflows and reduced reliance on FX swap, while the bank recapitalization program advanced, with most banks meeting new capital requirements. Mr. Chairman and distinguished senators, permit me to highlight key policy initiatives and strategic measures implemented by the bank to address various economic challenges within the review period. As part of ongoing efforts to rein in inflationary pressures, and anchor macroeconomic stability, the Monetary Policy Committee maintained a deliberately data-driven monetary policy stance throughout the second half of 2025. At its November 2025 meeting, the committee held the monetary policy rate, MPR, at 27%, following a measured 50 basis point reduction from 27.50% in September. The adjustment reflected cautious optimism about easing cost pressures while avoiding an overly restrictive stance that could undermine output recovery. Complementary measures on reserve requirements and liquidity management also supported disinflation efforts. In the foreign exchange market, the bank has sustained the implementation of reforms throughout the review period, reinforcing efficiency, transparency, and orderly market conduct. Key initiatives include the full operationalization of the electronic foreign exchange matching system and the Nigeria Foreign Exchange Code to establish clear operational guidelines and facilitate increased efficiency and transparency in FX transactions. Also, the revision of regulatory and supervisory guidelines for Bureau de Change operations to strengthen market oversight, enhance surveillance, and ensure compliance with established standards. These measures have helped to maintain relative exchange rate stability with minimum volatility, reflecting improved market sentiment and a positive response to the reforms. On the bank recapitalization program, we have stepped up our collaborative efforts with banks to ensure a conducive environment for them to meet the deadline without compromising the requisite standards. Outcome of policy measures: confidence restored, momentum sustained. Distinguished senators, I am happy to report that in most fronts, the second half of 2025 has recorded further consolidation of the positive outcomes witnessed earlier in the year. Most importantly, headline inflation continued its downward trajectory, supported by sustained monetary tightening, exchange rate stability, and improved food supply conditions. Inflation fell for 7 consecutive months to 16.05% as of October 2025, from a peak of 34.6% in November 2024, the lowest in 3 years. Food inflation, the largest single component of the basket, also fell to 13.12% in October, down from 21.87% in August. This steady disinflation is restoring real purchasing power for households and businesses, and we remain fully committed to pushing inflation down to single-digit levels over the medium term. Our transition program to inflation targeting framework, introduced in 2023, is gaining traction. We have improved data analytics, enhanced communication, and ended years of monetary financing of fiscal deficits, all of which have strengthened monetary policy transmission and anchored inflation expectations. The gradual transitioning towards a full-fledged inflation targeting regime will further anchor expectations and entrench price stability. A recent IMF scoping mission noted the substantial improvements in our analytical capacity, data quality, forecasting tools, policy communication, and institution coordination. The most visible sign of renewed confidence in our economy is the transformation of the foreign exchange market. The foreign exchange market has remained stable with significant reduction in speculative pressures and arbitrage opportunities, creating a more credible market. The once substantial gap between official and parallel market rates has shrunk to under 2%, down from over 60% a year ago. Consequently, the average exchange rate of the naira to the US dollar at the Nigeria foreign exchange market strengthened to 1,442.92 naira to $1 US as of November 26, 2025, compared with 1,551 naira and 8 kobo to the US dollar in the first half of the year. Foreign reserves have also rebounded strongly, reaching $46.7 billion as of November 14, 2025, the highest level in nearly 7 years, providing about 10.3 months of import cover in goods and services. Equally encouraging, diaspora remittances have surged by 66.7% from about $200 million per month to around $600 million per month in recent times. Another important outcome was a reduction of the US $7 billion of verified FX backlog, restoring credibility and confidence to the Nigerian economy. Consequently, foreign capital inflows reached $20.98 billion in the first 10 months of 2025, a 70% increase over total inflows for 2024. This also represents a 428% increase compared to $3.9 billion recorded in 2023, reflecting a clear resurgence in investor confidence. The sharp increase has boosted FX liquidity, strengthened external reserves, reinforced investor confidence, supported economic growth through higher investment, and improved Nigeria's credit profile by lowering borrowing costs. Similarly, the current account position strengthened in the second half of 2025 to $5.28 billion, which is 85.15% above the same level in first quarter of 2025. Nigeria's balance of payment deficit also narrowed significantly by over 90% in second quarter 2025 to just $0.27 billion US compared to the preceding quarter. Driven largely by favorable terms of trade, rising non-oil exports, and the impact of import substitution policies. These developments have contributed significantly to exchange rate stability and enhanced the country's external balance. Mr. Chairman and distinguished senators, as further proof of the positive outcomes of our bold reforms, we have seen renewed investor confidence supported by Nigeria's recent upgrade by Standard & Poor's Global Ratings, which revised our sovereign outlook in November 2025 from stable to positive. Fitch Ratings also reaffirmed Nigeria's sovereign rating at B, with a stable outlook in October 2025. This recognition reflects the impact of sustained reforms that have placed our economy on a more resilient path, signaled improved market access, lower borrowing costs, and enhanced global financial credibility. Complementing this progress, Nigeria's removal from FATF grey list marks another significant milestone in restoring international confidence in our financial system. Through strengthened supervision, better compliance reporting, improved data sharing, and new governance tools, we addressed deficiencies that had kept Nigeria on the grey list. Mr. Chairman, it is important to note that Nigeria's exit from the grey list has immediate and tangible benefits for us and the broader economy. It reduces the compliance burden on correspondent banks, improves access to international finance, and eases cross-border payments and remittances. The stock market gained momentum with ASI and market capitalization rising by about 19% between June and November, reflecting renewed investor confidence. The banking sector remained resilient, supported by recapitalization, enhanced risk management, and digital transformation. With just 4 months to the conclusion of the recapitalization exercise, I am pleased to report that the process is firmly on track. Several banks have already met the new capital thresholds, while others are advancing steadily and are well positioned to comfortably meet the March 31, 2026 deadline. To date, 27 banks have raised capital through public offers and rights issue, and 16 have already met or exceeded the new requirements, a clear testament to the depth, resilience, and capacity of Nigeria's banking sector. We have reinforced operational discipline to ensure reliable financial services. Measures include addressing ATM cash shortages, enforcing compliance sanctions, and strengthening oversight of payments agents and POS operators. Prudential supervision and Basel III compliance continue to mitigate risks such as cyber threats and credit concentration. Nigeria's digital finance transformation accelerated in 2025. The Payment System Vision (BSV) roadmap was extended to 2028 to modernize infrastructure, enhance cybersecurity, and deepen financial inclusion. Key achievements include over 12 million contactless cards in circulation, expansion of the regulatory sandbox to 40 fintech innovators, and revised agent banking guidelines, with stronger AML controls. Progress in payment interoperability has laid the foundation for wider electronic transactions. Today, Nigeria ranks amongst Africa's most advanced digital payment markets, supported by a vibrant fintech system that has produced 8 out of the continent's 9 unicorns. Mr. Chairman and members, the achievements of the second half of 2025 reflect strong coordination between monetary and fiscal authorities. This synergy has supported the alignment of policies, enhanced reform effectiveness, and created a predictable environment for sustainable growth. These efforts are driving job creation, boosting investor confidence, and laying the foundation for long-term development. Outlook: sustained momentum and cautious optimism for 2026. Distinguished senators, the outlook for 2026 is positive. Inflation will moderate further, foreign exchange stability will persist, and banking sector resilience will strengthen. Key priorities include prudential oversight. We will intensify supervision, conduct stress tests, enforce risk management standards, and address emerging vulnerabilities. 2, inflation targeting. We will enhance predictability through improved research, analytics, and clear communication. 3, liquidity and foreign exchange markets. We will maintain robust reserves, manage liquidity prudently, and intervene to curb volatility. 4, payment infrastructure. We will upgrade our system to support a dynamic digital economy with faster, secure, and cost-effective transactions. While global uncertainties and domestic challenges remain, Nigeria's stronger foundations will help mitigate risks. The CBN will remain vigilant and proactive in policy adjustments. Our focus is to consolidate reform gains, preserve stability, and advance economic renewal through collaboration with fiscal authorities, positioning Nigeria as a leading investment destination. Conclusions. Chairman and distinguished senators, the CBN remains firmly committed to its mandate and will continue to pursue evidence-based monetary policy, promote a safe and innovative financial system, and uphold public trust. Despite global and domestic challenges, progress is clear. Inflation is declining, the FX market is stable, reserves have strengthened, and the banking sector remains resilient. With sustained collaboration, we are confident of reinforcing Nigeria's macroeconomic fundamentals, which will serve as the building blocks for a more resilient and prosperous economy. Thank you for your attention.
Thank you, my distinguished colleague, Senator Abdullahi. So let me first thank the CBN government for that very purpose.
So on that note, let me start with the introduction from our end. And I'd like to start from, are we done? Yes. Okay, right. I think with the turnout, we are gradually matching the turnout of CBN on their own side as well. So thank you very much, my distinguished colleagues, for honoring this invitation. Now, the order of proceedings will just be the normal way we used to conduct the proceedings here. So I will start with my introductory remarks, after which I will also want the CBN governor to also give his own remarks as well. Then, of course, we will address some of the issues arising from mine, after which we can now evolve into a closed session and members will now be allowed to now engage. So I hope that is agreed. Okay, Carrie, thank you very much. Okay, so I will start. My distinguished colleagues and our invited guests, I am pleased to warmly welcome the Governor of the Central Bank of Nigeria and his team to this second statutory engagement for the year 2025. And as always, this session is convened in line with Section 8, subsection 4A and 5 of the CBN Act 2007, which mandates the governor of the CBN to brief the National Assembly at semi-annual hearings. These engagements remain pivotal to strengthening monetary policy governance, enhancing transparency, and ensuring continued alignment between the bank's statutory functions and, of course, broader national economic objectives. The central bank's decisions, as we all know, have very far-reaching implications for the economy, and dialogue, regular dialogue, enhances clarity, trust, and policy coherence. So since our last session in July 2025, which was the last session we had, we have witnessed notable macroeconomic improvements that deserve commendation. Inflation has continued on a downward trajectory, moderating to about 16% in October 2025. This is a significant achievement considering the inflationary pressures of the previous years. Equally of importance is the fact that the exchange rate has also recorded relative stability, supported by improved liquidity, enhanced reforms in the FX market, and strengthened transparency in operations. This stability has also contributed to boosting investor confidence and easing planning for businesses across the country. Equally of note is the convergence between the official and the parallel market rate, which has been largely maintained, reflecting improved confidence in the foreign exchange market. We also note the recent Monetary Policy Committee decision to maintain the monetary policy rate at 27% while adjusting the standing facility corridor to plus 50 and minus 450 basis points. This measured approach signals a cautious but deliberate easing of operational monetary conditions, which we believe will provide banks with greater flexibility to manage liquidity and support credit expansion, even as the headline rate remains unchanged to anchor inflation expectations. The adjustment in the corridor is expected to facilitate increased lending, we believe, to the private sector, particularly SMEs and critical growth sectors, without compromising the bank's efforts to safeguard price stability and exchange rate resilience. Taken together with the moderation in inflation and improved FX market stability, the MPC action, in our view, underscores a continued commitment to balancing macroeconomic stability with the imperative of fostering growth and financial inclusion. It's just that we don't clap in the Senate. I would have said CBN should clap for us, but don't clap. So it's okay. Thank you. We also note the steady accretion to external reserves, now exceeding about $46.7 billion, which also provides stronger buffers against external shocks and reinforcing Nigeria's credit worthiness. We equally acknowledge the CBN's continued efforts in deepening reforms in the domestic payment system, strengthening the prudential oversight and enhancing regulatory clarity for the rapidly evolving financial services landscape. These positive indicators have not gone unnoticed globally. So we commend the bank and its leadership for the role played in earning the country's favorable ratings from both Fitch and the S&P Global Ratings, reflecting improved investor sentiment, policy credibility, and macroeconomic stability. CBN, I hope we are capturing all of your efforts properly. I think it's important. Thank you. So having said all of this, it's also important to also just note some of the matters that that arose from the previous engagement, which I will just very quickly speak to, and almost after the governor's speech, perhaps you also give us some response to it. So the first one is that, as is customary, this engagement offers us an opportunity to assess progress on matters raised during our July 2025 session, and we will specifically require updates in the following areas. 1, status of the banking sector recapitalization exercise. including compliance levels, challenges encountered, and the bank's appraisal of the 2026 deadline. And I hope you have a copy of what I'm reading, because I said it should be. Okay, good. 2, is the submission status of the CBN's 2026 budget to this committee in accordance with statutory provisions. 3, and well, we can speak to it. Progress on clearing of any outstanding FX forwards and their implications for confidence in the market and investment flows. And 4, the updates on measures to tackle the circulation of mutilated and dirty Naira notes, including collaboration with the Nigerian Security Printing and Minting Company. And of course, 5, progress in addressing excessive bank charges, failed transactions, and ineffective consumer complaint mechanism across financial institutions. And 6, steps taken to ensure that CBN subsidiaries, such as the Nigerian Security Printing and Minting Company, and of course, NISA, cooperate fully with this committee during oversight activities. And lastly, of course, concrete measures implemented to strengthen working relations between the CBN and this committee. And I want to believe I'm speaking on behalf of my colleagues. Now, I haven't mentioned all of that. That some other issues I haven't given the accolades, which also mentioned issues of current concern, and I take that to my note 12. So while we celebrate the bank's positive developments, this committee's oversight function demands that we seek clarity on issues of significant public concern to ensure the integrity of financial systems, and so that the financial system remains unassailable. So the first one will be systemic liquidity and monetary operations. So given the sustained moderation in inflation, it would be nice to know how effective that the current CRR regime how has the CRR regime been in the management of liquidity? So does the bank foresee the possibility of recalibrating the 45% CRR for commercial banks in 2026 to free up lendable funds and stimulate private sector credit growth? And also, what is the rationale for the introduction of the 75% CRR on non-TSA public sector deposit at the September MPC meeting? On cybersecurity and digital financial ecosystem, as banks and fintechs rapidly scale digital operations, what updated regulatory frameworks has the CBN introduced to mitigate cyber threats? And how is the bank managing risks associated with fintech proliferation, digital lending, and neo-banking while supporting innovation and inclusion? Then the role of CBN in recapitalizing development finance institutions. The 2025 federal government budget made provisions for recapitalizing the Bank of Industry and Bank of Agriculture. We will appreciate clarity on the CBN's supervisory role or collaborative role in ensuring the effective deployment of these funds. FSRCC effectiveness. And in accordance with Section 43 of the CBN Act, we request an update on the frequency of meetings held by the Financial Services Regulatory Coordinating Committee in 2025, and so as to know the key resolutions made and concrete steps taken to implement them. And lastly, audit report on unremitted operating surplus. A recent national newspaper publication referenced the Auditor General's 2022 report indicating that the CBN already failed to remit almost about 1.44 trillion of the federal government's portion of operating surplus into the consolidated revenue fund. Given the strong public interest in this matter, we expect a clear and comprehensive explanation covering the factual position, the remedial actions taken, and steps to prevent recurrence. So on this note, I would like once again to thank Mr. Governor and his members, and of course warmly welcome them to this statutory engagement as we look forward to your candid responses that will further reinforce monetary stability, financial sector resilience, and the continued recovery of our economy. So I want to thank you, my distinguished colleagues, for your attention. So at this point, I'd like the CBN governor to also present his own report, and of course,